Hey guys, it is Julie here with TipRanks. In today's video, we are discussing the Virgin Galactic stock SPACE or SPCE. Now this company has had a lot going on in the last few months and especially these last few weeks. So we're going to cover some of that recent news, plus take a look at all of these new analyst ratings that are coming in with very differing price targets. Just before we get into all of that, this is your friendly reminder that if you enjoyed today's video, please make sure you hit that thumbs up button and that you're subscribed to the channel as well. For great stock related content, make sure you check out the TipRanks Instagram at TipRanks for Investors. The link will be down below in the description. All right, now let's jump right into Virgin Galactic Holdings. Now, Virgin Galactic first went public back in October of 2019 via a SPAC reverse merger. And right out of the gate, the stock gained a good bit of momentum, shooting up to prices over $37 per share, but quickly gave up most of those gains following. They stayed pretty level over the next year, and then leading up to this February, we saw them gain a lot of momentum again, this time shooting up to nearly $60 per share. Now, from its February highs to earlier this month, the space stock was down over 70%, and this was due to a few different reasons. The first and major reason was their space flight test being delayed, management saying that they still had some further issues to work out since their previously failed test. The second was one of their major investors, Palihapitiya Shamath, selling off his holdings, which were a sizable amount. You can see here on our insider trading activity from 3 months ago, he sold off $212 million worth of shares. Now, earlier this month, on May 10th, they shared with us their latest earnings report. They had an adjusted EBITDA loss of $55.9 million, down slightly from a loss of $59.5 million in the previous quarter, and below the EBITDA loss of $63.6 million expected by analysts. The company did book $0 of revenue in the quarter, as it did in the previous quarter, and Virgin Galactic had about $617 million in cash on hand at the end of the first quarter, down from about $666 million in the fourth quarter. Now, fast forward to these past 2 weeks, and the space stock seems to be on the rebound. From a low of $15.50 back on May 13th, their stock is now up 100% and is trading over $31 per share. Their news sentiment is extremely positive. This past week, they've been in 85 different articles, with 97% of them being bullish. Now, the news that shot the stock up over the last couple of weeks was then they scheduled a test flight and then successfully completed it this past weekend. Their spaceflight test went off as scheduled on Saturday, May 22nd, with the VSS Unity achieving a speed of Mach 3 after being released from its mothership and reaching space at an altitude of 55.45 miles before gliding back to Earth. It also carried revenue-generating scientific research, ensuring that Virgin Galactic will not post zero revenue in the current quarter. With mechanical difficulties on its VSS Unity spaceplane repaired and another successful test flight under its belt, Virgin Galactic is clear to wrap up its test flight schedule by the end of this year and is likely to begin commercial operations as early as the first quarter of 2022. Now, with all of this news happening with the Virgin Galactic stock, we've seen 10 analysts reiterate their price targets within the last 2 to 3 weeks. And it does come in as a moderate buy, but the average price target is $30.80 for a mere 0.59% upside. The reason for that is because we have analysts extremely divided on this stock. Our price targets range from a low of $18 all the way up to a high of $50. Taking a look at our detailed list of analyst forecasts, the most recent came in just yesterday from Kenneth Herbert at Canaccord Genuity. He rates the stock a buy with a $35 price target for a 14% upside potential. But just 2 days ago, we also had a hold rating from Kristen Liwag at Morgan Stanley. She sees a downside of about 18%. So let's take a closer look at the commentary behind those ratings. Starting off with our rating from Christine, who said that the flight over the weekend was a critical milestone for the company, but comes as the company still has risks. An investment in space at this stage in the company's life cycle involves significant risk and volatility, as well as potential opportunity. She delayed the forecast for Virgin Galactic's first commercial flight to 2022, assuming 2 commercial flights and 12 passengers flown, which would result in $4 million in revenue. Her revenue for fiscal 2030 was lowered from $1.8 billion down to $1.3 billion. And on the bearish side, we have Kenneth, who argues that after a long hiatus from the momentum investing world, the leader in the emerging space tourism market finally has the bugs worked out of its Spaceship Two spaceplane. With that accomplishment, he believes that the cadence of activity is scheduled to increase from here on out, and that Virgin Galactic will announce a resumption of future astronaut ticket sales later this year. In Herbert's estimation, the space tourism market can be worth $8 billion in annual sales by 2030, and Virgin Galactic already has 600 reservations booked for future flights, and that's just the beginning. In total, he estimates that the addressable market is well over 1 million individuals, and possibly more. Now, their price targets differ quite greatly, with a potential upside of 14% versus a downside of 18%. But looking back at our detailed list of forecasts, there are much wider differences there. The most bullish price target is a couple months old, with a $50 price target from Truist Financial, which would be a 63% growth potential. More recently, from Merrill Lynch, we have a buy rating at $41 for a 33% upside potential. Now, on the downside, we have one hold rating with a $20 price target for a downside of 34%, and another from Goldman Sachs with an $18 price target from 2 weeks ago that would be a 41% downside potential. So we have one analyst with a downside over 40% and another with an upside over 60%. So obviously a lot of disparity in the price targets there. It's also worth noting that yesterday, Cathie Wood's ARK Invest sold off their last remaining shares of Virgin Galactic. The ARK-X fund had a position of about 672,000 shares when the ETF began trading in late March. Then after selling nearly half of their position in April, they unloaded almost all of the ETF's remaining stake in early May when the stock was trading down near that $15 price point. Now, just yesterday, they sold their remaining 12 shares of Virgin Galactic from their fund. So it seems like Cathie Wood is sitting this one out for the next little while. Now, I would love to hear from you guys on your thoughts on the Virgin Galactic stock. Do you think that it's going to be soaring to the moon anytime soon, or has it already grown as much as it can? Make sure to leave your thoughts in the comments down below. This is an interesting one, guys. I think there's a lot of polarizing opinions here. As always, please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Always do your own research and due diligence before making any investment decision. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. I look forward to hearing your thoughts on Virgin Galactic, and we will see you back here next time.